All right, so I'm just going to continue the study of point and figure. Again, what we're trying to do here, is pretty straightforward. First is, if you're going to apply the Wyckoff methodology, you need to use three types of charts. It's just required. All right, the bar chart, the point and figure chart, and the wave chart. I know there's a lot of stuff on the internet where folks are just using bar chart, and each one of these has a purpose, and it's intertwining between the three that um, that makes the methodology. So yeah, you can try to do it with the bar chart alone, right? But um, it's going to be lacking, and you'll have to compensate. So I guess anyway, I don't have time to go over all that, so we'll just go over what I've covered so far in the Bethlehem steel. I mean, this could be any figure chart. The point is, over here at B, you had 1, 2, 3, 4, 5, 6, 7, 8. All right, you have 8, but you count from the low. What is the low? It's right here. You can count from the low and the line above, by the way. But remember, this is a pullback after a rally down. From A to B is a rally down. And then from C to back up to D is your halfway back move up. What I'm trying to show here is that the rally to the pullback can be estimated just like the pullback to the next rally can be estimated. All right, so yeah, one second. So this study started, we said it was about 8 count over here from the low. It would be 1, 2, 3, 4, 5, 6, 7. So instead of 8, it went up 7 around the halfway back up move. Now from the halfway back move, which is a 50% retracement from this low here, B to D, the pullback here, the bear pullback from B to D, you do another count. What's the count? Okay, let's see. From the line of 65, it's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. And the line above that, it would be 1, 2, 3, 4, 5, 6, 7, 8. So, what does that mean? Where was I? It means okay, so from 60 to 68 was the pullback from B to D, and okay, here you go. The 66 level, the count is what? 11. And no, hold on. The 60 a line of 8 forms across the 66 level. All right. So 66 level is here, and it's these x's 1, 2, 3, 4, 5, 6, 7, 8. You have to count the spaces. Okay, so from the resistance level here, you see at D, the count is 8 only when you count the spaces. What does that mean? It means that price will go down, or projected to go down, 8 points from 66, which is 58. But if I use the line of 65s, I have 11. And if I project from that line, it can go down to 54. And what does it say here? So a line of 8 forms across 66 and a wider line of 11 across 65, including the blanks. There it is. You gotta count the blanks, the spaces between the x's. You gotta count them. Forecasting a slump to 58 and possibly even 55 should support at 64 fail. All right, so it's very clear that all I'm doing is counting horizontally. That's it. I count horizontally from D, from the line at D, it's 8. Line below that is 11, right? So from these two lines, you project 58 and 55 just by subtracting. Subtracting what? Subtracting 8 from 66, and I think it was 10 or 11 from 65. All right, so we now know that should the line at 64 fail, right, it would carry the stocks through the previous support at 69 to 59 to a new low. All this is saying is that it's going to make a new low. Why? Because obviously 58 is a new low, right? Or 55 is a new low. That's it. Why is it a new low? Because over here, where you have from B to C, right? If it breaks the low below that is 59. So obviously one brick below is 58, right? So what am I trying to explain here is that the count across the resistance here at 66 and 65 is projecting a new low below 59, which was the prior low. You dig it? All right, that's all. It's really not that hard. If you can count, or if you can count, you can project. All right, all right. Yeah. Anyway, this is a one point count, and that's the projection. This is very important, folks, because as Livermore told Wyckoff, I do not get into a stock unless it has at least 10 points in it. All right, so what does that mean for us? As part of the trading plan, you have to know how much reward there is. It's not just the risk. I know everyone focuses on the risk, and then they get stopped out, but you have to focus on the reward as well and know how much is in it. And not just the behavior. This is also a mistake just to look for, I don't know, a reversal bar or what is that? A key reversal or something, right? So, or a big, whatever. So the point is, the price slides off to 63, which is right here. It broke 64, above which we use to project the new low. So price broke 64, and we have an indication that the supply at 66 to 64 is coming into effect, threatening a slump into a new low. Yeah, no shit. I mean, all I did was count. It broke down, and now we know that it's threatening a new low. Why? Because the projection is at least 58 to 55. That's the projection we did from resistance, and that's a new low. Following a further reaction at the beginning of December, the influence of previous support at 61 introduces us to a brief rally into the 64 to 66. I don't know, where is it? All right, so it cracks 64 and comes to 61. What is 61? It is your resistance area. I mean, not resistance, it's your support area. So as you know, markets have a tendency to bounce, right? So that's what it's doing. It's bouncing and it's pulling back to test. So it goes from 66 to 65, 64 to 62, 61 to 61, tags the support and pulls back to test. This is like that break of ice or whatever, break and test, right? The influence of the previous support at 61 induces, this is a very important word, by the way, induces, I'll explain all that later, but induces a brief rally into the range of 64 to 66, which is immediately checked at the lower top at H, right there, right, lower high. This spreads out the supply on the 64 line with a possibility of a 16-point decline, which goes to 16-point inferred in the still broader line of 63s. So all it's saying is he's just taking larger and larger counts from here at the top of the resistance. Your count was 8, right, at the 66 level, and I'll try to do this. Here you had 1, 2, 3, 4, 5, 6, 7, 8. When you count the spaces as well, you have a count of 8 from the 66 level, 11 from the 65 level. And then what happened? You had a break and a pullback to test along the line of H. And across, if you do the count across H, what is it? It's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. And here you go. The supply on the 64 line is 13, right? And if you take it a level even below that, it's a 16-point decline, all right, at the 16s. So how do you know which line to use and which line to use? All right. Okay, so before I go into that, and I'll just wait until we get to that. But here's one important thing is when you're doing pullbacks and counter trends, be very conservative. Be very, very conservative. Do not let hope say, oh, you know what? I'm going to buy here, so I'm going to use instead of using 60 and instead of using 59, I'll use the 61. Oh, yeah, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It's going to 71, but it doesn't, right? So do not use that line. You want to be as conservative as possible. All right, so I think over here it's 1, 2, 3, 4, about 4, 1, 2, 3, 4. And over here it's about 1, 2, 3, 4, 5, 6, 7, 8. And it goes up to 1, 2, 3, 4, 5, 6, right? So you want to be conservative and really like use your noggin, because the forecasting is not a hard and fast rule to say you must use the extreme low or the extreme high. It's more about potential, meaning what is the potential of the move. And when you're counter trending and trying to do pullbacks, you have to not only use count but use the left hand side. You'll see the breakdown level, and that'll give you a very good idea about where the price is forecast to tag. All right. Whereas if you're trading with trend, do not be overly conservative, because this is this is a pullback, and that pullback has a more likelihood of movement. Okay, so there are many ways, and I'll go into some of them on how to do this. So what some folks do is they use the most conservative line, and once it goes to that level, they use the next more liberal target, and if it goes to that, then after that they use the next more liberal target. Okay, that's one way to do it. The second way to do it is if you use the second wider line, but you count from the top. So you would use 11, but you would count from, instead of 65, you count from 60. Okay, so there are ways to do it. We'll go into some of them and do a systematic approach. But the point here is not, okay, let me, get it one extra point or one less or one more. That's not the point. The point is there should be a count in the first place that is big enough to consider the trade. That's the point. If this thing looked like this, would you get in? Because it went up here and it only has 1, 2, 3, 4. 4 points. But as it went up, it went down and it completed its 4-point target. Would you get in? If it only has 1, 2, 3, 4 points? No. Because there's not enough juice. There's not enough gasoline. There's not enough redistribution for there to be a good reward. That's the point. The point is not, oh, let me fucking count 1, 2, 3, 4, 5. That's not the point. The point is there enough of the move potential to consider the trade? And that is why Livermore said, I need at least 10 points to even think about trading in a stock. All right. Anyway, where was I? Insufficient support is met on the return of the former support level at 60 to 59. Yeah. Indication by failure of any rebound to appear at this critical point. What is he saying? Oh, okay. When it tagged that level, did it move up or did it move sideways? That's the question. Did it react or did it go sideways? If it goes sideways, like right here on 60, right? Could it even go to 62 or 63? At least here on this X, it had a pullback to H, right? At 61, it pulled back to 62, 64. But when it hit the extreme low of 59, which is the price support, do you see any type of bounce? No. What does that mean? Insufficient support. That means it's insufficient support. There's no demand there. And the stock slumps through this first indication objective around 58 to 55. So it goes to the first indicated objective, which was 58 to 55. How did we get 58? As I explained, if you count 8 from 66, you get 58. How do you get 55? As I explained, he counted 11 from 65 and you get 55 or 54, right? And that move is J. All right, so it goes to J. So those are the counts from the 66 and 65. They have been fulfilled at, I think it was J, yeah, at J. Here we have lateral movement that fails to induce any rally, which tells us in advance that we may anticipate a further drop. Again, if price goes to a level and doesn't react, it's gonna go lower because it's not inducing demand. It's not inducing demand. But this is different. It's like saying that instead of going up, it's going sideways. Lack of demand, it's going to puke. So at J, you see X, 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 X moving sideways, not even reacting back to 60 or 61. So it's going to break. All right. And this is a anticipation, meaning it's foreshadowing or forecasting a further drop. So what does that mean? When you do a count and it goes to your level and it's flat, there's no demand. So it's going to go, it's more likely that it's going to continue to go down. At 50 level, a new phase, okay, so it eventually goes to the 50 level. Now the question is, was any of these What did Wyckoff do to do the count? At first, he got 58. It went to 58. From the 66 level, he projected 58 by counting 8 across the level at 66. So it went down to 58. Then it just goes sideways, continues to go down. So the count below that from 65 is also fulfilled, right? So then the count below that, all right, the count below that is what? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So 13 from 64. I think that's about 51. So that one is where, that's where we went. Okay. So he basically used 3 counts and conservatively measured them, and when it went to that level, tried to identify if there was a bounce or not. And if there's no bounce, he's looking at the next target. That's all. So he used the top 3 resistance lines. He used the first 2 by default. All right, that gave him a range. The third one he used because it broke and pulled back to test. That's when he used the third line. When it broke down and came back to test, he decided to use the third line as well. All right, so for us, what does this mean? It means just use the top 2. That'll give you a range. All right, and look at how the market reacts at that level. And if it's continuing to go down, you can use the third the third one, especially if there's a break in test. Like if there's a break in test, you can use the third one and see what it projects. In this case, I think it projected to 50 or 51. See, where it says here, a brief lateral movement fails to induce a rally, which tells us in advance that we may anticipate a further drop to our next objective. Meaning, if your first target is tagged and there is no rally or weakness, it goes sideways, that tells us look to the next target, next price objective. Anyway, so over here 50, we have a new phase develop, and what he's saying here at K as a, where's K? That's K. K is 50. The steep pitch of the decline from 66 all the way to 50 without corrective rallies. Very important to have corrective rallies, because otherwise it creates oversold condition and a lot of crazy things happen. All right, brings about an here we go, oversold condition. Hence, when the price movement begins to flatten out and then records a rally to 53, we read this to mean that there's evidence of sufficiently good demand to bring the recovery to 55, possibly 56. All right, so he goes to 50, it's oversold condition, goes up to about 51, 52, yeah? And then finally goes to 53, and we said, oh, maybe it's going to go to 55 and possibly 56. And what it is do, it goes to 55. The ability to carry out this indication would have an effect of the break of the angle of decline from H to J. So he's always measuring that as well, thus giving us a tentatively bullish inference to be added to our other 2 indications, namely an attainment to the downside objective and suggestion of some type of preliminary support at K. I don't want to go into that. All right, the rally to 55 dies after exhaustion, the force of demand at 50. And meets resistance on approaching the former trading range or shelf of congestion IJ. I mean, it's a break and test. Like over here, you have a little range, and you have a break, and comes back to 55, which is what? The breakdown. So that's all it is. That little congestion area, it breaks it and tests it. However, during the balance of December, the bag is held practically at 50. After that, it keeps going to 50, keeps going to 50, keeps going to 50. For all the bears and the income tax sellers. A quick sell-off to 48 under previous established line of supports at 50 first implies the development of new weakness. So it goes down, boom, 48. That's its weakness. And a further decline, but an immediately sharp recovery of this loss identifies it as a possible shakeout, meaning it has no follow through. It breaks and immediately comes back in, very much like a spring. And as the dip to 48 exhausts the indication of the supply encountered across the line of 653s, we look for another rebound. So what is he saying here? The 58 exhausts the indication of the supply across the line of 53s. What? 50, 1, 2, 3. 53. He's doing this count here. You see this 53? How many X's are there? 1, 2, 3, 4, 5, 6. So under L, the 1, 2, 3, 4, 5, 6, a line of 653s. He counted the spaces again and said that from that it projected a move to around 46 of what is it, 53 minus, what is it, 1, 2, 3, 4, 5, 6, should be 47. So it goes to 48. The stock has now supported 7 times 150 with one slip below that figure. If we consider the figure chart alone without any regard to other evidence, we might regard this as sufficient preparation for the rise of 13 points. All he's saying is it looks like a base. So when you see base, you count 1, 2, 3, 4, 5, 6. What is it? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. What is he doing here? He's just counting the base. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Actually 14, but whatever. So he's looking and he's counting and he's saying, okay, it's going, if you don't look at the bar chart along with the PNF chart, if you purely look at the PNF chart, you'll say what? It's going up 13 points. Counting 7 X's and 6 blanks. 1, 2, 3, 4, 5, 6, 7. I count 8. 1, 2, 3, 4, 5, 6, 7. Anyway, I count 8, but he's counting 7 50s and 6 blanks, which is 1, 2, 3, 4, 5, 6 blanks. It's all right. So for the sake of complete illustration, let us assume that we do regard the broadening as a base of support for an A-buy advance. Base of support, okay? Like you need a base of resistance or for move down. About the 1st of January, the stock seems to be on a hinge at 51. So right here, all you have to do is draw a line and you will see it's making a wedge. So it's on a hinge at 51, then it rallies to 54, but here, when it goes to 54 at O, the price movement flattens out under the previous high of 55. We conclude that if it's ready to go up, it will not fall back to 50 again, which is the base. A normal reaction would be what? 54 to 451. It's basically halfway back move. However, from a bullish viewpoint, we would prefer not to go that low. You just don't want it to go back to support. All right. Therefore, when it continues to hesitate, forming a line of 653s, I think this is it. Here, 1, 2, 3, 4, 5, 6. We decide that its position has become critical and that a dip to 51 would imply a weakness, while a further sag to 50 would cancel our expectations of an early advance to 64. So, I mean, he got 6 here and he's saying, okay, don't let it dip. If it dips, it better go halfway. If it goes to support, it's screwed. Price actually comes down to 50 again, and that's it. We conclude that the preparation for advance has not been completed because it went back to support, the line of accumulation. Instead, there's a possibility that if the 6-point reaction indicated by the line of 53s at 0 should materially exceed, the next stopping place might be 44. And perhaps 40. Objectives taken along the wider line of 1053s. So if you take the wider line of 1053s, 50, 1, 2, 3, what do you get? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. I think that's 15. So 15 off of 53. So that would be around 42. Around 42. So he's doing around, might be 40 to 44. Okay. Objectives along the wider line of 53s from M to O and 15 across 51 across the rally tops from 55. I mean, he's just counting the tops. Here at O, yeah, and here under O. Let me just do this again. So let's see. M to O. Anyway, I'm not going to get overly bogged down in this, but the point is just look at the resistance and count it and project. And then use target after target. A steep drop to 46 at B and a prompt rebound which recovers more than half of the loss is confirmed by another shakeout by a brief dip to the old supporting 50 line. So far, 50 supporting with 1 and 2 shakeouts. And now we have a substantial line at the 50 level. So he's saying that there's been about 2 shakeouts across the 50 line, but if we do a count across the 50 line, it is pretty big. It amounts to 25 points across the 50 line. And that indicates a very significant rise, indicating a rise from 47 or 50 to approximately 72 and up to 75. So I just want to talk about this a little bit. All right. So the count we're taking across this big base, right? And the projection, you can start from the shakeout low or the spring low. All right. So a lot of times you'll see a formation like this and you're thinking, where do I take the count? Do I start from the shakeout low? Do I start from the prior low, which was a higher low than the shakeout low? you know. So what Wyckoff did was he took the line of 50s, he took the base, he took the support, all right, and separated it from its shakeouts and counted about 25 points. When he projected it, though, he projected both from the 50 and from the 48 and from the low. So when you can count from the base and project from the low and get a range. So the 25 points from the base would be 50 to 75. From the low, 49, 8, 7, 6, it would be 25 plus 46, which I think is 75 minus 4, around 71. So around 71 or 72, which is what he's getting here. But we are sure that this is a range of accumulation. Are we sure? How do we know? You know this is accumulation? Could be bullshit. Later on, we'll see like how to use the bar chart in conjunction with this to identify that, yeah, it is accumulation. Anyway, so it's basically just making a big range. All right, and let's see if I can get this. Uh, and now he's also combining this with the bar chart as well as wave chart. You can really see how it's setting up the big base of accumulation. And in this base, you do have a spring and shakeout. So it is, it is important to look for bases because they help you project. All right. All right, just give me a minute here. Okay, as the 1 point chart shows a rapid lifting up of support. So it's basically instead of making low lows, making high lows. We read this to mean the supply of stock is becoming steadily scarce. Basically, when you have a rising wedge type of formation, right, or like higher supports, he's he's saying that that's indication that there's scarcity, and indicates that we're ready to go up in the market marking up phase. That is, if our timing is correct, we are not likely to see it below 50 again. Since the possibility of move to 72 or 75 is possible, and the stock appears to be on the springboard. So around here, around R, it's ready to fly. And there's a very nice period of preparation. Okay, let's condense these 1 point into 3 point charts and see now how it looks. And this is important to do because sometimes it gives a different projection and it's not all these minor fluctuations. I even consider this to be like a filter. All right, so let's go through this. These dots on the 3 point chart show how the chart would look if the stock should form a judgment rising to 55 and it should make 56. There would be no question about it being a bullish position. All right. All he's saying is, look, 1, 2, 3, 4, 5, 6, 7, 8. From 50, you're projecting to 58. Why? Because there's a count of 8. So add 8 to 50 and you get 58. However, the distinction here is that this is not a 1 point chart. So you would have to multiply that by 3. So 8 times 3, because it's a 3 point chart, is 24. And therefore you would add 24 to 50 and get the count of 74. And now the 3 point chart is confirming the 1 point chart. This is how the charts confirm in one another. Uh, as you can see, like I'll just do a couple more here and then we'll be done. The 5 point rise indicated by the line of 58. So we have 58 at T. What do you see? 1, 2, 3, 4, 5. Where does it go? 1, 2, 3, 4, 5. Done. The stock settles back, meeting high support 60, while it consolidates the advance from 50. All right, line of then 60s indicates 68 to 70. 1, 2, 3, 4, 5, 6, 7, 8. Take 8, 1, 2, 3, 4, 5, 6, 7, 8. This goes to 68. From 60, count is 8, goes to 68. Right? What? 1, 2, 3, 4, 5, 6, 7, 8. I counted 8. Um, 69. 'Cause this is important right here. Just below 70, the 69 stretches out to 8, counting one blank, which says get out and go short. I can't make it a 72 or 75. I'm going back to 61. Basically, there's some distribution there. Accordingly, we sell short and stop. All right. Now, before I go any further, I want to just say why his opinion changed up there at the at this broadening. He says after the stock goes to 68, it's rather hard work to advance the price. When you see him say it's hard work to advance the price, that is indicated by a shortening of the thrust. How do you know the thrust is shortening? From high to high to high to high. So you see from U to 70, right here, U at 68 to 70, the thrust is shortening. All right, there's ample supply, all indicated by shortening of the up thrusts from 68 and to flatten out in a narrow range as the stock encounters the resistance of a former high, former resistance area. So when you see that shortening of the thrust going into resistance, like that's a problem for longs. All right. And here is where price falters and makes a lower high and the apex forms, which you know is like some type of apex, a springboard, or whatever. And a break to 62 warns us of more distribution was accomplished on the 5-point rally to 65. All these things is a break and a test. And now you can kind of start doing the counts on the downside. And the line of 464 says another 61 is ahead with possible drop all the way down to 52 or 50 on the basis of the wider line of 64 to 65, right? U to X. So you can see how he's doing counts. And I'll get to the whole point of this. Give me 1 second. Wow. All right. So, I mean, what's the point of this? Without getting into all of the intricacies, the point here, and I'll just go through it. It rallies from A to B. At B, it forms a count. It forms a count across the low. 1, 2, 3, 4. Only 4. One above it, across the line of 60s, it's 1, 2, 3, 4, 5, 6, 7, 8. From 60 to 68 is projected 1, 2, 3, 4, 5, 6. It goes to 66. However, if you take the projection from the extreme low, it goes to 66, but it was 67 was projected. So basically, you have enough of a move here to easily go to halfway back. That's the point. And then from the halfway back, you have a line of resistance. This is very important because if you're trend trading, what are you looking at? You're looking at the test of the breakdown, around 50% retracement or more. And when it does that, you want to see the redistribution. So this is the redistribution, and that redistribution has a target from the top and the second line, and you use that as a range. When those targets are tagged, you take a look to see if there's any rally. If there's no rally, use the next target below from the line below by just counting across from left to right or right to left or whatever. Get that count and see what is the potential next target. So that will continue from this rally to the pullback to the next advance. From the next advance, so for what we're seeing here is as it goes down, its inability to rally is basically telling you it's going to go down lower to the next target. Inability to rally, it's going to go down lower to the next target. So that's what's going on all the way here from F all the way down to K. It's just reaching those potentials that we had projected from the resistance indicated by the redistribution or the pullback right here. And also the other point is that to get the count to see if it's sufficient enough for you to say, yeah, this is meaningful and there's enough reward for me to make a sizable amount of money, because it goes from 65 all the way down to around 50 or 51, which is about 15 points, right? So that's very good, especially if you catch the break in the test and I have only 2 points of risk. Like over here, when it goes 65 and it breaks the low and then it has a sluggish move back up and it's now on the hinge or the springboard to break, this is an area to consider really, without a doubt, taking a short. If not taking it at the higher level here after the initial breakdown and pull back from 65 all the way down and then coming right back up to test. So that's the whole point. After that, it gets into an oversold condition. How do you know? Look at this line, this column, and go straight down. From that oversold condition, it starts creating a base. That base has two shakeouts, one here and one there. You see M around M and P. It has two shakeouts, and then it just bobs right back up. So this is really good because we see that base forming at around 50. We also see the shakeout attempts being rejected, meaning it goes down and comes right back within the range. It goes down, and then what? The next column takes it right back within the range. From that point, it makes higher lows. As it's making higher lows at Q and R, it is ready to blast off. There'll be a lot of other indications you'd be using. One is, yes, the up waves are stronger than the down waves in terms of their range, price, volume, activity, etc. So that, you definitely want to take a look at that. And now it's over here and it's ready to fly, and that's what it does. Over here, it breaks out. It forms a line across, I think T is very small, 1, 2, 3, 4, 5, and a wider line across 60s. Why I like 60? Well, actually, I like it because it rallied and pulled back. So that's like, the pullback or break and test. So when it break and test, I'll use the entire line. 1, 2, 3, 4, 5, 6, 7, 8. So here I'd project to about 68. 1, 2, 3, 4, 5, 6, 7, 8, which is 68. After that, what happens? What happens is it starts to shorten the thrust. What do we mean by shortening the thrust? Meaning from high to high to high to high to high, especially from U here, 68 to around 70, the thrust shortens significantly and it starts widening out. So what does that mean? If it rallies straight up and starts going sideways, and it's at a former resistance level, Okay, now you know you got to be careful. Um, and then finally it breaks and breaks some more, and when after it breaks, it comes back and tests and forms another hinge. So what I do is just take the count again, just take the counts, right? So I would take a line across X 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. 14 and project lower. All right, you could do that, or you could take the line across the 65s 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So use 11 first and then 14 next, and see how it handles 55. So 1, 2, 3, 4, 5, 6, 7, 8, 16. Right here at 55, it breaks. Its rally sucks, and it's just going sideways at AA. So it's not going to do nothing. And finally, it just keeps breaking. But you have to, you can take the stepping stone count at AA too. 1, 2, 3, 4, 5, 6, 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. You definitely do that. But you have to be careful when it breaks and it overshoots. Right? It overshoots and it starts rejecting in the form of springs or shakeouts. Right? Like over here, you have 40, goes dips below to 39. It dips below to 39, dips below to 39, and then from that low finally breaks. That's when things happen. Break, pull back to test. Where's the count? This is quite large at across 40. So so that's the point of point and figure. Later on, I didn't want to go into all of the details because it's very exhausting and no one's going to really understand it. But for sure, later on, I'll be coordinating this with the bar chart, right? And I think that that's going to be very beneficial because eventually you want to get to the point where you're coordinating the three charts with ease: bar chart, figure chart, wave chart. Why? Because the wave chart will give you the entry, the low risk entry where you can detect demand and supply. So that's for the entry, where you have small risk entry. The point and figure chart will give you the reward. So you have your risk on using the the wave chart, and you have your reward using the point and figure. Okay, and then you can combine that with the bar chart because you need to be able to identify climaxes, daily support and resistance, and other formations as well, like in terms of absorption or all of that. Okay, so all three need to be coordinated together, looking for a big move with small risk. All right, that's all, folks. Thanks.